for us, it's cheesy, but we set out to improve liquidity and transparency in this great asset class, and that's what we're after. It's happening. It's happening very quickly, and it's a lot of fun for the large and growing group of us working here together at AcreTrader. And so that's, I'll foot to that and say that's what I'm most excited about is that improved transparency. It is better in liquidity. It's better for the farmers, better for the sellers, better for investors. And so that's certainly what we are pursuing doggedly as a company and what we are most excited about.
You are listening to the Millionacres Podcast. Our mission at Millionacres is to educate and empower investors to make great decisions and achieve real estate investing success. We provide regular content and perspective for everyone from those just starting out to seasoned pros with decades of experience. At Millionacres, we work every day to help you demystify real estate investing and build real wealth. Hello, I'm Deidre Woollard, an editor at Millionacres, and thank you so much for tuning in to the Millionacres Podcast. Today, we are diving into farmland investing, and this is a topic I find especially fascinating because since COVID-19, I think we're all a little more focused on food supply, where our food comes from. We're all more aware of it right now. And so my guest today is Carter Malloy, founder and CEO of AcreTrader. Carter grew up in a farming family, and he's had a lifelong passion for both investing and agriculture. And with AcreTrader, he kind of brings those two together. Prior to AcreTrader, he was part of a successful equity investment firm for 5 years. Before joining in 2013, Carter was a managing director with Stephens Inc., a large private investment bank where he was an equity research analyst focused on the internet, data and analytics, and real estate processing sectors. And prior to Stephens, he owned small businesses focused on internet marketing and sustainable fuel technologies. So welcome, Carter.
Thanks for having me.
So I'm really glad that you're doing this with me. I've talked to you before, and I'm just really excited about farmland investing right now because I see that more people are aware of it, but also I know that it's a really stable investment over time. So let's start there. Why is farmland so stable?
It's a great question, Deidre. I think there's a long answer and a short answer, but to be brief, it's really about supply and demand, and it's one of the really fascinating underlying economic conditions of farmland is that we only have so much farmland in the United States and the world for that matter. But if we look at the U.S., it is one of those assets where it is finite, and we mean there's only physically so much land, and we're losing it. We're losing about 3 acres per minute, according to the American Farmland Trust. And so on the other side of that, so there's your supply. That's the asset we're investing in, and it is shrinking. On the other side of that is more people are eating. We have more people born every day. The global population is growing. Oh, and we are eating more protein, and we are eating more farming-intensive foods. So reducing supply, increasing demand over time has led to pretty steady price increases. And whether you're looking over a 30 or 50-year type of time frame, that has led to for the land itself, that's led to call it a mid-single digit, 5-6%, maybe a little greater appreciation every year. On top of that, so that's your sort of core fundamental driver of value is appreciation. But then you have to remember when you own the land, it is productive as well. So either you're growing fruits and vegetables and earning an income from that, or more often, the farmer is paying you a simple rent. So in our case, an example would be if the farmer's paying you, call it a 3, 4, 5% cash dividend or distribution, and then you're making a 5 or 6% appreciation a year. That sort of equates to a 10% annual return, which is roughly where farmland has been historically. It's been actually more like 11 or 12% for the last 30 years. That is a pretty phenomenal return profile, period. And then there is a but, which is that is exclusive of leverage. When we talk about returns in the S&P or in real estate, as an example, commercial or residential, we're amplifying those returns by using debt. We're measuring that farmland return and quite often earn the returns without using any debt. And that's what's, when you talk about stability, that certainly helps. When you're not amplifying your returns up, you're also not amplifying them down. And so as a result, not only has farmland produced pretty impressive historical investment returns of 11 or 12% over the last 30 years, but has done so with far, far less volatility or swings in the value of it or price swings relative to other asset classes out there.
So with commercial real estate, you're generally investing, in something that you're either going to build from the ground up, or you're going to value add, or something like that, and you're going to, boost the rental base or something like that. How does that work with farmland, and how is it different from commercial real estate?
I think the easiest way to say it is it's easier. I think when you build a building, that the building immediately starts to attempt to break down on you. And that's just physical forces. Over time, you will be out, whether a tenant moves out and scratches the place up, or there's broken toilets you've got to fix, or plumbing in the middle of the night. We're investing in soil. And so it's just a far simpler asset class when we really boil it down relative to commercial and residential real estate. And beyond that, again, because we're not putting a bunch of capital expenditures into it, we don't have a building sitting on top losing value over time, which they do over long periods of time anyway. And I think that's an exciting component of investing in farmland, is the relative simplicity of it. Our tenants, for that matter, rather than renting an office building today, I mean, we all see what's happening in the office real estate space. It's a pretty difficult time. That same is true in retail. Our tenants are farmers, and those farmers tend to pay their rent once a year in advance, and the turnover tends to be fairly low. The vacancy rates and default rates tend to be really low, exceptionally low in the industry, sort of unheard of in other industries. And so, again, this boring aspect of this, owning dirt, which just sounds incredibly boring, is to us perhaps the most exciting thing about farmland, is the relative simplicity of it as an asset. And again, those underlying economic drivers that help us to make real investment returns over time.
I don't think it's boring at all. I sort of think about it in terms of like the farmers market and things like that, and just it's sort of a chance to get that one step closer to the earth. And so I think that's part of why people are more interested in investing in farmland. Is that what you're seeing? Are people drawn to it for the investing and the returns, or are they drawn to it for something deeper, maybe a desire to invest sustainably or something like that?
It's a great question, and it's not a cop out, but all of the above. We have some hardcore financial engineering types that invest on our platform based solely on the numbers and in-depth due diligence and underwriting. And we as a company, we're technologists and we're financial analysts, so we love that. But we are farmers first here. Most of us at AcreTrader have backgrounds in farming, have farming families, et cetera. And so, we tend to also understand and appreciate that intangible component of we grow food, we grow cotton for clothes, we grow nuts to put on to put in snack mixes, and we grow fuel. So it's a really fun industry to be involved in, and we do also certainly have investors focused on sustainability. We have investors that only invest in the organic deals we have on our platform, and they're willing to, even though the returns, we still are very, very particular about the return profiles of the land we invest in. I think a lot of people just want to be closer to their food. I think is what it comes down to your point. Beyond that is it's not just us that are investing in farmland. The smart money got here, or has been coming in pretty quickly. So about a decade ago, there's something like $3 billion of private equity investments in U.S. farmland, and today that number is something like 30 billion. So 10x over a decade, give or take. So the smart money is moving there fast, and I think we're actually, as a platform, as AcreTrader, we're seeing incredible demand growth in our company as well. As you're exactly right. People, they want to diversify their portfolios. They want to get away from the stock market. They still like to make good returns. And hey, this is a fascinating hard asset that I think everyone can understand and enjoy being a part of.
Well, you mentioned nuts, and that brings up one of my questions, which is the difference between row crops and permanent crops. And I think that's one of the things that is a little tricky for people to understand about farmland investing is that there is a difference between growing almonds versus growing something that you pull up every year like carrots.
There is, and it's a great question. And we have some great literature on our site to discuss this as well. But very quickly to describe the difference, if I can, we think in general terms of row crops as being the more stable and simpler of the two. Doesn't mean better, it's just a different approach. And that is because the farmer is paying us this fixed rent. We are not, in the world of row crops generally, we are not stepping in and taking operational risk. So we are not impacted as investors by things like the weather or by growing conditions or by how the harvest was or commodity prices. And so it's a very, very simple approach. And over time has produced some great returns for those investors. Permanent crops have a little bit of a different look and feel to them. Unlike row crops, which the farmer replants every year, permanent crops may last. In the case of almond trees, 20 years. Grapevines wine grapes can last up to 100 years, but you're still looking at decades of timeline for those assets. So as a result, the investor or the landowner tends to own the trees as well. We'll use that almond example. If you own the trees and you own the land, then usually you are exposed. You're selling the crop at the end of the day. So there's less situations where a farmer pays you a fixed rent, and more where you get either a percentage of revenue that comes off the farm or the actual profits that come off the farm. So as an investor in permanent crops like apples, oranges, kiwis, avocados, and nuts, there is typically a more volatility in the income. So there are bigger swings in your income. You can achieve marginally better returns. So I call it marginally higher risk and marginally better returns is the way we boil it down. To me, personally, both permanent and row crops are an interesting way to diversify a portfolio. And I think that's a big benefit of our platform. What we're after is allowing investors to own some of all of the above.
So you talked a little bit about almonds, and that makes me think about California and what's been happening this year and last couple of years with wildfires. Obviously, this year has been particularly hard on Napa and what's been going on there. And so I'm wondering how AcreTrader thinks about things like that and other issues, wildfires, but also water and the increased need for water in places where it's getting drier.
I think the wildfire issue, because of the recency effect of it, as well as because it's a very visceral or very violent situation when you witness it, and then it happens in a place like Napa, and we all think of how dire the consequences are. But on an absolute basis, when we look at the entire state and where crops are grown in California, as a general statement, while fires are a threat, the places that we have invested in, we haven't seen any impact from them as a platform, and we tend to be in farming areas where you're pretty far away from the hot zones, if you will, of those wildfires. The way bigger concern in our minds is water, and there are some really attractive, from a dollar perspective, there's some really attractive deals in California. Looking at pure financials, at the pure financial returns of those investments. The problem is they may only be great for 5 or 10 or 20 years, and then there's no water anymore. Or the probably more likely is the water doubles or quadruples or more in price, and really, really negatively impacts the return profile of those investments. So we are, I guess, hyper cautious around water in California. Current access, potential access in the future, and then politics. There are some water districts that have these kind of binary unknown political risks involved with them, where, again, there's very attractive investments available, but we tend to not go there because of the longer term political risk and implications that it could have for investing there.
And is that happening across other states as well? Are there other states where you feel like water is a major concern?
Oh, yes, absolutely. Colorado has a smaller, on a relative basis, farmable area, arable ground, but there are some very real water access issues beginning to sprout in Colorado. And then there's an aquifer underneath a large swath in the middle of our country called the Ogallala Aquifer. So if you look at the panhandle of Texas and you drive a line sort of north up into the Dakotas, there are some major water access issues popping up there. And so again, it's the 100th meridian line. So in that general area, so compounding on top of that is the rain line is moving in terms of precipitation in those areas. So again, we haven't done any investing to date in a lot of those general areas. There are still some very attractive places that are sustainable for 100 years, or the foreseeable future in terms of generations. And so we'll look there. But we are, as a platform, I can't imagine being excited about somewhere where you may be out of business in 10 years. And there are a lot of those out there.
Interesting. So is that impacting some of the smaller farmers? Is that leading to more consolidation as maybe some of the smaller farmers try to get out ahead of that and then, sell their farms? Is that part of why big agriculture seems to be growing?
Yeah, I think there's a couple of components to unpack there. First is it's absolutely impactful to the farmers that are owners and or farmers on that land, and we hate it. You never want to see anyone, and especially the American farmer, struggling because of local or national issues or weather-related issues. And we do see speculators playing in those areas as well and driving prices up and down very quickly. And it just feels a little dangerous to us as investors. The notion of consolidation and quote unquote big ag is a concern as well. But I think it's one that is not, what's the way to say this best? There are producers, so you can look at big millers or I'm sorry, think about companies that produce actual grain products, and they are big ag, right? They may own large swaths of land to grow inputs for their products. Beyond that, there are then some mega farmers, we'll call them, but they are not as prevalent as the news makes them out to be. The extreme majority of farmers in the U.S. are still small farmers. They have to think like a CEO, though. Farming is not a practice where you can simply, if you want to be a quote unquote farmer and run your own ground or lease ground for other people, it's not a simple thing. It is a wildly complex organizational task and execution task just to do the farming. But importantly, you're also running a business, and whether that's a couple hundred acres or 10,000 acres, that notion of a CEO farmer is becoming really, really important in a world of compressing margins, as we see look across any industry, and margins do get compressed over time. That is happening with farmers as well, and they have to fight back and scale up and implement technology to continue to improve. And luckily, we are seeing a lot of that. We as a company work with a lot of really great farmers that we're proud to call our partners.
I love that. I love that idea of the CEO farmer, because I think that in this culture so much we focus on tech entrepreneurs, and we get caught up in the future, but we also forget that a farmer is primarily an entrepreneur.
Very well said.
That's a great place to take a quick break. We hope you're enjoying this and every episode of the Millionacres Podcast. If you have a moment, we'd love to hear from you. Please visit millionacrespodcast.fool.com and tell us what you think of the podcast so far, what kind of content and guests you'd like to hear, and what else we can do to help you grow smarter, happier, and richer through real estate. Thank you. So we are here with Carter Malloy, CEO and founder of AcreTrader. We are talking about investing in farmland. So Carter, one of the things that I really liked in your bio is that you've really got that mix of you're a farmer, but you're also, an investor and someone who understands data and things like that. So I want to have you talk a little bit about your journey and in founding the company, and also how you find the farmers that you work with in AcreTrader.
Absolutely. So I'll quickly get through my journey, then talk about the fun thing, which is the people that we work with and the farmers that we work with. So my personal journey, I grew up in a farming family here in Arkansas, where I live currently, and where our company is based. And studied science in school, then did a dozen years or so professional investing. Worked as you mentioned earlier, worked at a fund and an investment bank. In the background, my dad and I had been buying and selling farmland. I became really interested in it pretty early on in my career as an asset, and I was just fascinated with the returns we were able to generate in this world. In a volatile world, I should say, in a crazy investment world that we've all endured here, especially the last decade. And I was living in San Francisco for a number of years, investing professionally, and again doing the farmland thing on the side. I had a neighbor who came to me and said, "Hey, I want to invest in farmland with you," and pulled out my computer and said, "Well, cool, let's go find something online." And it was this moment of, oh my gosh, there's nothing here. Here is this multi-trillion-dollar asset class putting up incredible performance for people investing in it, and there's no way for you and me and regular people to get access to it other than going out and plopping down very large 6 or 7 figure lumps of money, probably in a place we've never been to with a broker we've never met. And so I figured there was probably a better way to do that, and that was the beginning of what's led to the incredible team and company that we have today with AcreTrader.
So
and farmers, we'll get to that next.
Yes.
So how do we find farmers we work with? At this point, a lot of it is referrals. We've had a lot of really great experiences working with farmers and helping them grow their operations, and they tell their friends about us. We also do market to farmers. We work with managers across the country with a litany of different people throughout the farmland value chain, if you will. But today, a really important source of deals for us, without a doubt, is farmers. And they see us as a capital. They rightfully see us as a capital partner. We love finding those farmers that are wanting to grow their business and wanting to expand and hungry and, like we were discussing earlier, adaptive of new technologies and running a great business. And they say, "Hey, I'd like to pick up some more acres to farm, and I think this land may come up for sale, or I may be able to find a favorable investment on this piece of land if you'll let me rent it from you." And so we see that as a big win-win for that farmer and for us. We're acquiring land at attractive prices, and we have great farmers to operate it.
So what does the due diligence process look like? Do you have is there something you're looking to see in the farmers, sort of is it a business plan? Is it something like that? How do you kind of evaluate who you think is going to be more successful?
We do. We have to evaluate both the farmer and the farm. At the end of the day, our investment dollars are going into the farm itself. And so we do tenant evaluations and area tenant pool evaluations, et cetera, with the individuals we're working with. But extremely importantly is that we are acquiring the land appropriately. And that takes a team. We've got a team here that's managed hundreds of millions of dollars of farmland. We've got an accredited farm manager on our team, an accredited rural appraiser on our team. Some of our team came from private equity. Some of our team came from running large farms. They get it in a way that I don't. But we have a dedicated team here that does our farm sourcing, that is out every day, all day, looking at farms, speaking to farmers, speaking to farm owners, which are often not the same person, and really looking for those diamond in the rough investment opportunities. We tend to invest in probably 1 in 100 farms that we look at. That seems like a pretty crazy number. It may be much lower than 1 in terms of percentages. We do enhance that process also with the use of proprietary data and software and analytics. And for us, it's a numbers game, right? You've just got to look at a lot to really find the ones that you love.
And so your investors right now are primarily accredited investors? And so are they mostly individuals, and are they taking what size share are they taking? Are they invested in multiple farms or just doing a single investment usually?
It's a good amount of both. We have a full gamut from individual investors out to institutional investors that family office type of investors that participate on the platform. We love seeing people building diversified portfolios. So rather than investing $100,000 or $1 million in one farm, spreading that out across a bunch of farms on the platform, and we see that activity all of the time on the platform as well. So it's a mix of all of the above.
Excellent. Thank you. And I know any real estate investor, they always ask about tax benefits. Are there any tax benefits for investing in farmland that people should know about?
Perhaps the largest one is the government incentive programs that exist for the farmer. Now, does that benefit directly to us as investors of the farmland? Directly, no. We're not collecting government payments or insurance subsidies or disaster assistance to more clarify those payment types. The farmer does have those components of assistance within his business to help out in years. As an example, the last few years we entered a trade war. Those negatively affected commodity prices. And as a result, the government stepped in and helped the American farmer. And so that helps us in that it helps to stabilize our tenants and our partners out there. Direct tax benefits, usually no. There's not a lot. It's a pretty standard investment, usually recognized as ordinary income and then a capital gain upon sale. So the IRS views it as a pretty standard real estate investment. There are some potential tax benefits, I should say, because I'm not a tax advisor here, when we are making investments. And we do that often, where we'll buy a farm and then invest money into improving that farm, whether that's more efficient and better or larger irrigation. We're building with a partner in Washington right now, a 2 million gallon reservoir for water. And then planting trees. So those types of improvements and investments can have some positive tax implications.
Well, I know a lot of people wonder about opportunity zones. That probably isn't a factor as much for farmland investing. I know recently there was some talk of hemp opportunity zones. Have you heard about those? And is that something that might be a potential area of investing?
So I'll discuss OZs and then hemp. For opportunity zones, we've seen a lot of this in commercial real estate, and I've spent a good amount of my career looking at commercial real estate. See a lot of good money chasing after bad just for a tax benefit. If you find yourself investing in a deal solely because of the tax benefit, it maybe you should rethink it. Because in reality, some of those opportunity zone deals are not good ones. Some of them are great. I don't mean to cast a wide net like that, but we want to be careful. We don't want to invest in a farm just because it's an opportunity zone. If it's there, that's a great extra benefit. But what we don't want to do is go underwrite a marginal investment because of the tax advantages. For hemp, we have stayed away from it as a platform. I'd say we've stayed very clear of it. For one simple reason, it's not that that's a bad investment or a good one. It's that it's speculative to us. Relative to what we look at, but we're a conservative group by nature when we think about investing. We want risk-adjusted returns, right? We want a great Sharpe ratio, for the technical term for it. What hemp is there's a lot of cowboys out there. Some of them are going to make a killing, and a lot of people are going to lose all their money. And those types of games can be really dangerous. Again, not knocking it. We know lots of hemp farmers. We know lots of people in that business. And I think that there's some really interesting and great opportunities. It is not one that we have pursued because we are not expert enough in forecasting what that commodity price will do and understanding the economics of those businesses.
Thank you. So in terms of what the farmers grow, is there any change in that? Do you chase trends? Like if there's obviously avocados have been huge over the years, and there's currently an avocado IPO going on with Mission Produce. So are you following trends of what people are eating and adjusting things that way, or are you mostly focused on staples?
We are nerds. We follow trends, man. We've got more charts and graphs and databases than we can ever talk about. We've got a few data scientists that are solely focused on collecting information. So Absolutely. We love trend watching and macro understandings and forecasting and micro analyses as well. In the world, you're exactly right. In the world of staples, so row crops, right? Things like, as an example, corn and soybeans, you can switch those things out pretty easily. And we see farmers do that, one, for soil fertility reasons and productivity reasons, and two is for pricing reasons. So that is an advantage when we're discussing row crops, is that you can change your mind every year and grow something different. And so if the trend turns against you, you can flip it out. And in the Delta, we grow a lot of rice. And maybe in bad years, you can switch back to corn. So on the West Coast and places in the Southwest and Southeast, when you're dealing with permanent crops, you do have to take a bet. You've got to make a commitment to a particular permanent crop for, like we said earlier, decades. And so avocados look great today. Presumably, will they for the next 20 years? Is a massive amount of analysis, and at the end of the day, it's an educated guess. And that's what all investments are. Right? You're just trying to get as educated you can to make that investment. And I have more opinions than I could ever share with you on various crop types and their medium and long term outlooks. But
Well, I think it's interesting because I think that's one of the things that I love about real estate is it's what I really love is human behavior. I mean, thinking about farms, you think about something like almond milk got really, really trendy for the past few years, but now you've got oat milk. Oat milk has suddenly become very, very popular, and so all of that has an impact on farming, obviously.
without a doubt, consumer behaviors can also change. I mean, they can change quickly, and those types of what we'll call fad farming, we really try not to chase. And I would include a previous crop type we discussed as something in fad farming. So there's fad farming, or going after fads, I should say, and then there are long term secular changes as well. Orange juice consumption is one of those. So growing citrus for orange juice is not a great place. There are great pockets still there, but long term the trends are poor, and we see a lot of orange groves in Florida being pulled out to put row crops back in.
Interesting. So with oranges, one of the things I've noticed is there was a rise in those sort of small peel and eat oranges, the like mandarins and things like that, versus something like orange juice that's seen like as being better for children, things like that.
You got it. My kids, they love cuties, but they don't drink OJ, and that's exactly it. And if the tree grows large citrus specifically for juicing, you can't just change your mind and go, oh, we're going to grow cuties this year in that tree.
Exactly. So you mentioned data scientists. Obviously, there's one of the things that's really interesting with farming is the rise of ag tech. You know, everything from drones in the field to soil analysis. What kind of things do you see your farmers using, and what excites you in the future about technology and the ways that it impacts farming?
That's a fun question. It's incredible. We have this Cambrian explosion going on right now. I think Silicon Valley 5 years ago discovered that, hey, a whole lot of people don't live in big cities and they grow things, and so we're just seeing this absolute deluge of, and for the farmers, frankly, it's overwhelming the amount of technology tools and hardware and software being presented to them. A lot of those are okay. Some of them are amazing. And with our farming partners, we see them run the gamut of some of them don't want to be bleeding edge adopters because some of these technologies won't make it. And so they maintain older equipment that they know is highly reliable, as an example. GPS guidance has been a pretty big game changer. Seed genetics were a game changer, I guess, 30, 40 years ago. Today, that the in-cab or in-cabin changes to your on-farm implements and machinery are having pretty material impacts. As we look forward the next 20 years, in my opinion, machine learning and in particular visual analyses are things that are really beginning to have an impact. And understanding your acreage and your farm on a micro level as opposed to macro. So not applying, as an example, not applying fertilizers in a blanket fashion to a 40-acre tract or a 400-acre tract, but instead having precision application of those inputs for your farm. Better for your farm, better for your pocketbook, better for the environment. So it's a big win. And while huge advances have been made, the opportunities there are incredible, and the impacts I think that they will have for all of us.
There's no Tesla for tractors yet.
Not yet. I'm sure someone's trying, but hopefully they're not rolling an empty tractor down a hill and claiming it's powered by batteries.
Exactly. So as we wrap up, I want to talk a little bit more about climate change, just because I feel like that's such a big factor for people that are considering farming, investing. And so, we're seeing strong hurricanes, things like that. We talked about fires and water. So if someone's thinking about investing in farming and they're looking at the way that, that the climate is changing, what risks should they be thinking about?
It's a fascinating consideration, and one we take very seriously. And I think one that leads us to always go to know on marginal land, land that is in already affected areas or areas that could soon be affected. We tend to steer from. A great example of this is the 100th meridian we were discussing earlier. It's a line, going up and down through the middle of the U.S. and it's a rough approximation for where precipitation occurs in that area every year, and it is shifting. And so you could buy a farm near there that today has plenty of precipitation and looks good, and in 10 or 20 years will look very, very different. And so those are certainly things to watch out for, as we mentioned earlier, water and fire risk in California, and throughout the West Coast are big considerations. Those extend throughout, and there's climate change. There's also just usage, right? We're just using a lot of things as humans, and one of those is water. There are areas in Arkansas where I live here where we won't acquire farmland because the water table is declining. It's okay today. You farm great today, but there are risks in 20 and 50 years that may not be there. And the closer we get to that terminal date, the more problematic it will become for the valuation of that particular parcel.
Is there any good news in it in terms of longer growing seasons in areas in the north?
There's always a silver lining. Absolutely, there are trade-offs. To us, it appears they're likely more negative than positive ones, especially with pest pressures coming in longer growing seasons. But the inverse of that is you're exactly right. In the further northern climates, widening the window of your growing season a little bit can be advantageous for both timing of planting and harvest, as an example.
You mentioned one thing that I kind of want to just learn a little bit more about, which is pests. So obviously, it seems like this year it was the murder hornets, but we're starting to see these stories in the news about different types of pests that come in, and there's sort of a scramble to figure out how to mitigate their damage. Is that something that investors should also be thinking about if they're thinking about farmland? Is it something they should worry about?
As a whole, there's a lot of types of pests. The good news is that we as humans have gotten very good at fighting back against them, and so while the preference is to use less pesticides rather than more, and again, this isn't just an environmental concern; it's a cost concern, right? The farmers don't want to go spray extra pesticide; it costs them money. But in places where you do see more pressure from pests, then you can often offset that with inputs and applications.
Makes sense. So as we wrap up, what are you most excited about for the next 5 years of farming, and why should investors be excited with you?
Yeah, I think for us, it's cheesy, but we set out to improve liquidity and transparency in this great asset class, and that's what we're after. It's happening. It's happening very quickly, and it's a lot of fun for the large and growing group of us working here together at AcreTrader. And so that's, I'll foot to that and say that's what I'm most excited about is that improves transparency. It is better in liquidity. It's better for the farmers, better for the sellers, better for investors. And so that's certainly what we are pursuing doggedly as a company and what we are most excited about.
Nice. I like it. So thank you for your time. And just want to remind people that if you're interested in learning more about farmland investing, you can find Carter at AcreTrader.com. As he mentioned, they've got some very interesting data on row crops and permanent crops and all of the things that are happening in farming and a lot of things that you can use to make decisions if you decide to invest in farmland. Well, thank you.
Thank you, Deidre. Great to visit with you. Thanks for having me on.
Thank you for tuning in to the Millionacres Podcast. I hope you liked today's show. If you enjoyed this episode, please consider subscribing through your favorite podcast provider. And if you have any questions, please feel free to drop us a line at help@millionacres.com. Stay well and stay invested. People on this program may have an interest in the deals, offerings, or services they discuss, and Millionacres or the Motley Fool may have a formal recommendation for or against. Always consult a certified tax professional before acting on tax advice, and do not buy or sell assets based solely on what you hear.